Alrighty, traders, good afternoon and welcome to the Throwback Thursday session here. Normally it's a Wednesday. This is FX Big Dog coming to you live, and we're going to go ahead and take a look and see what's going on with the US dollar CAD as well as the CAD Swiss. Now, if many of you are following me and you're following my trade ideas, you're probably getting caught up in this big hype here about where is these two currency pairs going. And listen to me, it's not a good situation, but it's something we need to address. And we need to be real about what's going on with the market so we can address how we're going to manage our positions from this point onwards. So, without further ado, my friends, let's go ahead and dive into the details. I'll see you right after this. All right, welcome back. Welcome back. And we're going to go ahead and take a look and see exactly what's going on in the market right now. But more importantly, we want to go ahead and figure out what the heck is going on. Is there something we can do to be able to, combat the current position that we're in, and just see exactly what it is that the market's really trying to tell us? Because at the end of the day, traders, we're just trying to figure out whether we're going to hold on to this position a little longer, or if this market's going to actually start looking to reverse. The biggest questions, or one of the questions that come up quite frequently, is of course where is this particular pair moving to? All right, and so because of that, we want to make sure that we understand what exactly are we looking for, right? We want to figure out what exactly are we looking for in order to be able to figure out what this pair is doing. And so we're going to start off by just going to the basics. And what is the basics? Basics for us is looking at the technical charts and looking at the details of what the technical charts are telling us, but also going ahead and including a little bit of fundamentals as well. All right. So we're going to go into the news and we're going to take a look over here. And what we've seen out this week in the news is that we've seen the Bank of the Feds. We've seen the Federal Reserve Fund come out with a hold on interest rates. Now, you would think with all the jobs being down and jobs down, housing market starting to decline, you would think that there would be a little bit of room for the Feds to start talking about interest rate cuts. And yes, there has been conversation about that, but the biggest concern is that we may be in recession. And so, if that's the case now, that creates even a bigger sort of major panic in the marketplace. And you've probably seen today how the Dow has sold off today since we've had some news out in the PMI. With the PMI data coming out today, we've seen a big sell-off, and you think, what? PMI data, that's what it takes to sell off in the marketplace? But it's this concern that the Fed's been talking about possible sort of recession. And it's this recession that's caused the sell-off. Now, remember this, and a lot of people are asking me the question, why is the dollar selling off? Not selling off, but why is the dollar rallying? All right. Why are we seeing the market pushing higher and higher? Well, the reason for that is because we're seeing the market selling off in the stock market. So with the sell off in the stock market, we know that price is going to move in the opposite direction when it comes to the dollar. Okay, and so in that case, then we're going to make sure that we are identifying what's going on with the technicals and then addressing it based on what we're seeing. So, so here's the deal. Fed's kept the rates unchanged at 5.5%. They're talking about a possible being in recession, and that's causing a bit of chaos in the market. If we go ahead and take a look at the Dow this morning, and we're just going to go ahead and let me see if I can pop it over here. Let's go take a look at the Dow right here, and this is the Dow sitting over here, and we can see Dow is badly selling off right now. Now, the two currency pairs that we're talking about today is the US dollar CAD and the CAD Swiss. Behind me on the chart, you will see right here, the bottom chart is the US dollar CAD, and you can see there's resistance. These are daily time frames. On the Swiss franc, which is the higher chart up here at the top, you can see that we've got support sitting over here. All right. And so looking at those details, let's go into some deeper analysis here as we dive into the chart. So what is going on with the US here? Well, firstly, number one, traders, we have to understand that the market's constantly looking for liquidity, right? Whether it's buy side or sell side, it's drawing towards these liquidity levels. And so, as much as I would love to say prices coming down to 3,200 in the next couple of days, we certainly know it's not. We have to be real, because we have to understand that price doesn't just move to a level that we expect it to go. It's got to create sort of liquidity grabs first before it gets there. And so here's my concern, and I'm addressing this because we're all big boys, and we're all big boys angles, and we're all investing with knowing that there's risk on the table. And so we're looking at this, we go, okay, yeah, we had a good 2U turn. This was exciting, but what was not exciting about this move right here is that we had a fair value gap sitting over here. All right, now remember, and this is something you need to understand. When the market's moving in a bullish trend, then what ends up happening is price will come back to insufficiency. And when it falls in insufficiency or tests insufficiency, it normally then continues to rally. Insufficiency is what I refer to as my fair value gaps. This is where the market's showing insufficiency. And so as I look over here, this is the insufficiency right here that price went ahead and filled. So we had price rallying up, we hit buy side, it rejected that level, and we sold off towards insufficiency. Now, when price does that and starts rallying, this becomes a problem. All right, a huge problem for us, because what this means for us is that this liquidity area right here that price swept is not good enough, and that smart money is pushing it higher, and that smart money is going to get to the next level. Now, I've got to go ahead and zoom out of my chart, and you can see right here, there's that buy side that price swept, all right? There's that dip we saw, and price came back to insufficiency. Now it's gone ahead and taken off again. So the thing here is, where's it going next? That's the question everyone has, right? Here's another buy side up here. Let me go ahead and mark it off, all right? I'm going to take this right here, just go ahead and just clone that and bring it across here to the top. Here is our buy side sitting at the price tag at 38.98. So call it 3,900. 3,900 is the next sort of move that the price is trying to go ahead and take out. And so when it takes out that, what's price going to do? It may go ahead and try to rebalance. What is rebalance? Rebalance means that it's going to come back to a 5-0 retracement of this big bullish move. That's rebalancing. So the market always likes to rebalance, just like we see with fair value gaps, how price rebalances based on filling the gaps. When we create these insufficiency areas, price likes to rebalance. And so what we're going to see is this area and the high that it's going to create, we're going to see price coming back to rebalance. Now, when it comes back to rebalance, we're then going to have to reevaluate, because when it comes back to rebalance, the question that everyone's going to have to ask here is this maybe just the market staying inside consolidation and that price is moving back down to this right here? Or are we seeing a little bit of, depending, of course, how high the market moves? Is this what we're calling our manipulation move out of this range here? And that price is actually going to distribute back to this level and even further down south? Again, things we have to wait for in order to be able to define what price is really telling us. And so as I look over here, and by the way, traders, I know that some of you look at me like, big dog, you got to know all the answers. And I don't have all the answers, because a lot of the times we have to collect data, and the data is what tells us what the market's going to do. This is not a crystal ball that you go ahead and look at and you go, oh, I get it. By the way, in 3 days' time, we're going to go ahead and hit certain levels. It just doesn't work that way. All right. What we have to do is we have to trade based on people's emotions, right? Because people's emotions is what drives markets up and down. The same reason why we sort of sell off in the stock market today. The reason why I sort of sell off in the stock market is because the Feds are talking about recession, and that puts panic in the market. And then what happens? People get they pull all the money out of risk on, and then move it into risk off, which is a safe haven, safe haven currency pairs. We'll start seeing some strength in the Swiss franc. Reason why we're seeing the CADCHF selling off. All right, people are moving money into cash because they're panicking. Now, what we could see over the next few days, we could see the market moving into some sort of consolidation, some accumulation. And I'm going to go into this now a little bit more detail about that when we go to the Swiss pair, because the Swiss has taken out the CAD Swiss has taken out a low that we said that there's a liquidity draw to that level at 6,300. What's price going to do at that level? So I'm going to go ahead and talk about all of that stuff right now. Now, traders, I might be telling you something that you're like, big dog, I don't like what you're saying. But you know what? Sometimes we've got to listen to things that we don't like just to understand exactly what really is going on. We can go ahead and put our head in the sand and expect things just to change automatically overnight and move in our direction. But we also have to understand what's going on. And that way we can prepare ourselves better. If it means that you're shaving off some of your positions and just keeping your margin levels at good levels, if it means that you need to add more funds to your trading account, if it means that you've got to go ahead and stop certain currency pairs and just go ahead and keep margins for the ones that you want to maintain, everyone has got different types of ways that they want to handle their manage or sort of their risk. All right. And that's okay. All right. But what we're going to do here is we're just going to talk about what is expected. What am I looking for? What are the things that are going to help us to be able to see some relief, but also see some profits on these positions? All right. Because let me say this. All right. We will see profits on these trades. All right. I will see profits on the trades. I've managed my risk. If it means I stop in certain currency pairs, I allocate funds to other currency pairs to be able to accommodate for that. Whatever happens, I'm going to manage my risk, but I know I'm going to see profit on this. All right. But now I have to see, where is price going? Now with the movement that we've seen today, where could be the next move? What could be the next step on these pairs? So let me dive a little bit deeper into this. So here on the US dollar CAD, again, I'm seeing a liquidity draw up here at 38.92. So call it 3900. All right. So we're trading at 38.80. So it's probably going to see another 20 pip push before price goes down. Now, looking at the daily time frame, this is going to be the first sign when we're going to start seeing the market moving into a range, into some sort of consolidation. And this is the first thing I'm going to be looking for right here is the daily. So traders, during the day, there's not a lot I can tell you about the pair itself other than right now, because we're seeing price trading above these highs, I've got to look and see what the daily does, right? So today, I want to see how the daily candle closed out. If we close out where it is, it's not good. But at the same time, it puts me in a place where I now can take the range of this day, and now I can see what the market's going to do at this point. So if we see, and the reason why I'm looking for change of structure, change of character, change of direction is because we're at key level of resistance, right? So at this area, I should be looking for a reversal. And this is not a case of, well, big dog, you got your head in the sand and you're not seeing the real deal, what's going on. No, it's a case of, hey, listen, I'm at strong resistance. All right. We've been in this 2-year range. And I don't believe that this sort of recession that we're talking about right now is going to be enough to keep people panicking and staying out of the markets. I think we're going to get the smart money back in the market. I think when the market sells off the way it has, I think smart money is going to come back again, and we're going to start seeing some bigger rallies in the Dow market, in the Dow again, and we're going to start seeing dollars starting to sell off. Long term, I've told you I don't believe the dollar is going to be strong long term, and I think in the short term we're going to see some manipulation, but we're going to eventually see some price moving down south. Okay, and I feel that we're in this manipulative move right now. Now, if we take a look over here again, I've got to look for this daily to confirm my directional bias. Right now, it's telling me we're bullish. So what I might just go ahead and do is just to put things out there. I'll go ahead and put this high up here at the top. Just mark it off as my range for now. I'm going to go ahead and let's just do this. I'm going to mark it off as, let's just do, you know what? Let me just pull this up right here. Yeah. So I'm going to do this. And I'm going to say daily, because this is a daily time frame, right? Daily range, all right? I'm going to go ahead and mark it off, daily range, right? And actually, let's make a daily range high. And then I'm going to mark it off down here below. I'm going to go ahead and copy that. And let's go ahead and clone that down here. And I'm going to move it down to the low of this candle. And I'm going to call that my range, daily range low, right? That's simple, okay? And so I'm going to keep an eye on this. I want to see if we're going to get any manipulation above the highs in maybe tomorrow's trading. Remember, we've got jobs coming out tomorrow. Jobs isn't going to show great. I think it's forecast. Let's take a look at the forecast right now. So we're looking at non-farm change to non-farm employment change to show lower, 176K. Unemployment rate seems to be looking to stay unchanged. But this is the thing. We're going to look at lower numbers. So with the lower numbers, could that be enough for the currency to drop short? Maybe not. Maybe if the Feds are talking about in a recession, this could be a little bit of a downer, and price may continue to be on this panic Dow sell-off, right? But in any case, without that, I'm just going to go ahead and pay attention to this. I have to. So I want to pay attention to this right here and see what the market does. So this is the area. Nothing other than this area right here is important to me. And if we see the market go up higher and close up with new highs, then clearly my range is starting to pick up. But remember, traders, as the market continues to show new highs, at some point we're going to see the market stalling. And when it stalls, then we're going to see where price is going to come back to, because then we're going to look for insufficiency. All right, price is going to move back to insufficiency, and that's where we're going to go ahead and look to at least have short-term targets. Now, with that being said, let me go into now some details with regards to our shorter time frame. So if I go to the 4-hour time frame right here, and I'm looking over here, we can see that there was a little bit of consolidation here. All right. So we have a little bit of accumulation. We have price on the buy side of the curve, and maybe it's trying to take out that liquidity high there at 39, call it 3,900, and then turn around and head back down south. But I'm going to pay attention to what goes on, because if price comes back down here, all right, we're heading back down to this daily low, and a break of that daily low is coming back to this insufficiency area right here in the 3760 areas. And then traders, this then looks to me like we've got a market structure shift. We may go to a larger time frame, and we'll probably see a crown pattern, bearish crown pattern setting up. And that'll tell us that maybe we're going to go further down south, maybe down to this daily liquidity over here, or at least insufficiency right here, around about that 3640 level, 3660 level. All right. But again, that's the possibilities. We got to see if this manipulation right here was enough to go ahead and clean up retail traders and turn the market to the downside. All right. This is where I'm looking at the US dollar CAD. So again, very important. What's my next step? I'm going to be paying attention to the daily range. And the daily range is going to really tell me when is it going to be time for price to start moving back down south. All right. If I don't see anything on the daily range, I'll go to the 4-hour time frame. Let's see if we can see some market structure shift and moving to the downside. Going to the CAD Swiss. CAD Swiss is also a pain in the you know what, all right? So the thing is right here is, let's look at the bigger picture here. Let's go to the weekly, and let's just evaluate what's going on here, all right? Now, if I go to the weekly, we had the market, and let me go ahead and move out the technicals here, and let's go talk about it right here. So we had the market creating support right here, creating resistance at the top right here. We had accumulation right there. And so we had the market accumulating in this large range. We had a breakout, false break. We went to the sell side of the curve. Then we moved to the buy side of the curve. We actually saw a market structure shift right here, which is perfect. And then we believed that price was going to target this. The reason why we're seeing this downside move right here is because we failed to take out external liquidity. And so if that's the case, then price is always looking for external, right? We may have some internal liquidities that the market's going to chase after in the intraday, but it's the outside, the outer liquidity areas, the external liquidity levels that price really wants to take. take out. And so we've just gone ahead and taken out that low at 6,300. So traders, this is important. All right. Again, I'm not trying to blow smoke up, you know what? I'm just trying to tell you what I'm looking for. All right. With the market going through this liquidity right here, I'm going to probably expect the market to go ahead and consolidate, create a little bit of consolidation. If I'm wrong and prices goes back up, even better, because that just reconfirms how bad that manipulation was for it to go ahead and kill these sell stops right here. All right. Now, this is the thing. How am I gonna handle this? Well, I'm gonna handle this day by day. I'm gonna go to the daily time frame, and what I'm gonna look for right here. I'm going to look at this candle right here, and I'm gonna go ahead and use this candle to confirm when we can start seeing some turnaround. So I'm gonna go ahead and put this in right here. And let's see if I can paste something if it works. Oh, no. Okay, never mind. All right, so let's go ahead and do this. And we're going to call this daily range. All right, daily range high. And then here we're going to go ahead and just copy that. And let's clone it down here. And let's go ahead and pull that to the low here. Obviously, this is not the low yet until the daily candle closes out. But this will be the low right here. Okay. And so I'm looking for right now, I'm looking for price to move to the buy side of the curve, but I've got to get some market structures change. And so my first sign is going to be what the daily range is going to do. Do I see a daily range starting to show like this? Is the market going to do this? A candle, maybe a wick down here, and then move back up like this? And then if it does, what I'd like to see is the market break through here. Because if we are going to see manipulation down here, then this means that this is accumulation, manipulation, and then distribution. Distribution will come back up here. And when it does, where are we looking for price to take out? That buy side liquidity there. If we see the market take out buy side liquidity there, then we are heading into what we call a market structure shift. And a market structure shift would mean that it's reconfirming that we're now moving back into the buy side of the curve, which means traders, we're going to continue to start looking to buy long. Now, this is the thing that we have to understand, okay? Because the market has taken out some deeper liquidity, all right? If price starts coming back up, where's price going to target, all right? Price taking out the low. We're going to look for internal. If you look at external, what is external? This is external right here, like external low. This is external high. With price sweep in the low right here, that's external low. So we got a low, low, high up here at the top. So when price fails to stay below here and comes back up and we see some market structure shift, where's it going? It's going to external. External sitting here at 6,700. Now, for those traders that have the equity, have the margin, I'm going to do this on some of my own personal trading accounts. When we see market structure shift and we see a change, a confirmed change of directional bias, and that we know for sure that price is holding above the previous low of that external low, then this might be a time to start adding on positions. Not now. I'm saying adding on. Let's go scale into our position as price starts reversing. So as we start seeing price doing something like this, and then come back to insufficiency, we're going to start adding in. When price goes up, breaks structure right here, then we're going to go ahead and see price coming back to insufficiency once again. We'll go ahead and buy in again. Remember, we're scaling in on the dips. We'll scale in on the dips. So by the time price comes up to this, we've taken our break-even point and we've moved it closer and closer and closer to where market's trading by going ahead and strategically re-entered into the market to bring us back to this level. All right. These are the things we're doing. We had traders doing this about a year ago, and that they've already gone ahead and closed out a big portion of their positions that are in the CAD-Swiss. There are traders that have survived through this movement. All right. And I did the same on some of my personal trading accounts. So we've got obviously a sort of guideline and a sort of rule of what we do, a rule of thumb of what we do. But there's alternatives, right? The alternatives of how people can trade it. And so because there are alternatives, you have to know and realize that, listen here, all I'm going to do is just look at the external structure, identify what the pattern is, and then once I just identify the pattern, I can then identify the trading opportunities. So traders, yes, and I'm going to say this as we close today. I do believe that the markets are extremely manipulative. All right, we've seen a lot of manipulation in the market currently right now. There's a lot of things going on. There's concerns about recession. There's concerns about whether the Fed can bring the inflation rate down to the 2% level. There's concerns that we're in a possible civil war heading into the end of the year elections. I mean, things are definitely not looking good. We had an assassin attempt on the president, on President or former President Trump. You can see that there's definitely uncertainty across the board, not just here in the US, but we've seen it across the board in other countries as well. So there's definitely uncertainty in the world right now, but I still believe that we have to look at the details, right? And the details aren't necessarily one sort of data. We've got to take everything into consideration, and that includes how the market is technically setting up, because the charts are in fact telling us how people are dealing with the emotions. When you see a major sell-off in the market today, we know this is concern. All right, this is the smaller investors that are concerned, and there may be some smart money manipulating the market as well to drive the market to these stops and stop levels. All right, you heard about the big squeeze with GameStop and how the smart money tried to force the market down while all of these retail traders were pushing and driving the market up. And what happened? The tight big squeeze. Who won? The retail traders won at the end of the day, because they were enough to be able to drive and push against these hedge funds. I'm not saying that this is what we're going to do. I'm not saying this is how we're going to do it. I'm just saying that there is a lot of manipulation in the market, and we have to understand it in order to be able to be comfortable with it, in order to be able to self-manage our positions and get through this stage. All right, because there will be, a couple of weeks from now, I can't give you timelines, but I'm definitely telling you, moving forward over the next couple of weeks, you're going to come back and look at this day and go, oh my gosh, I just don't want to be like in that position again. And you know what? You don't have to be, because it's these times that make you realize that maybe you're over leveraged. Maybe you need to make some adjustments to your risk management. Maybe you need to make some adjustments to your biases. I know for a fact that over the last 6 months, I've reevaluated the market, and I've realized that the market conditions have changed. And if we don't change our bias as to how the markets are moving now in today's environment, then we're going to always be sitting in the wrong, or at least on the wrong side of the curve. And we don't want to do that. And so the most important thing right now is to assess where we are and how we're going to handle this, and pay attention to the details. These details that I've just given you today are crucial to identifying when is it time to start getting back in to a trend, and we have to wait for the signs. So traders, I'm going to keep you updated. If you follow me, go ahead and make sure you go ahead and subscribe to the YouTube channel. Follow me, because I'm going to, over the next few weeks, all right, I'm going to continue to bring some information to you guys about what's going on here, so that you can control your emotions, prepare yourself financially, and also financially be prepared about what the markets are doing, so that you can make adjustments accordingly. So with that being said, traders, have an absolutely awesome week. Make sure you go ahead and smash the like button. If you like the content that we are delivering right here, smash the like button, subscribe to the channel, and guys, I will see you next time, and hopefully it's in better conditions. This is FX Big Dog, signing off.